Hi, welcome to this video today, which is on the 17th of October. Now, in terms of what I want to look at today is the COT indicator, and I want to give some tips and advice in terms of using it, okay? Now, in terms of the COT indicator, everyone knows we like to trade divergence between the groups. If large speculators move aggressively one way, smart money commercials go the other. We'll want to trade with the commercials, but there are different types of divergence in my view. Also, you can use the COT report in other ways. You can use it in terms of rate of change between the groups, and you can also use it to get clues to where currencies might go that are not even on the report. Now, in terms of the COT, also today, what I want to do for anyone new who's using it is go through expected payoffs and probability, okay? The difference between the two. It's very important to keep it in mind. If you do, then you'll trade the COT with a lot more confidence, in my view. Now, in terms of the commitment to traders report, obviously regular viewers now have got deep affection for it. Why? Because back in the early 90s, when I was doing our educational material, I wanted something a bit different and discovered it with the COT. I was out with a guy I knew in Florida, ran a company called Commodity Trend. His name was Joe Van Nice, and he was the first person ever to put the COT indicator on charts. In those days, the charts came in books, okay? And he kindly let me use his charts in the UK, gave me a distribution deal. And in terms of a lot of the tools we use, actually, and when I talk about, great traders and so forth, if I took more tools from one person than anyone else in terms of my trading, it was definitely Joe Van Nice. Fantastic guy. Really helped me out. Anyway, what I want to do now is basically go through some tips. We'll look at some chart examples as well. Right, let's move over to the tips. Okay, let's take point number one, trading divergence. And really there's three types of divergence that, we trade in relation to the COT. There's obviously the high volatility price spikes that always blow off in the other direction. Breaks from low volatility ranges. And also we like to look at the divergence in historical context. Now, for example, we go to the charts, we're looking at USD CAD. It's not the biggest divergence on the COT, but it's the biggest in 5 years, and that's very important. I'll be giving examples of all these setups, okay? But in terms of high volatility blow-offs, we will normally come into them and look for very little confirmation to go against the specs. This means we'll very often get stopped out once, maybe even twice, sometimes even 3 times before we catch the move. But it doesn't matter. You know those high volatility spikes are going to blow off, okay? Low volatility breaks from ranges. That is one of our favourite setups. As soon as low volatility changes to high, that's great. You're looking for follow through, okay? Now, you don't just look at divergence between the groups when you trade the COT, in my view. You should look for rate of change of positions. And the rate of change of positions is very important. Always going to give you good high probability trades. A good example will be the British pound USD recently, when we had that big move to the upside on the rumour that the Bank of England are going to imminently raise interest rates. It's the biggest rate of change ever. What you had was a big hit on large speculators, okay? Their short positions get taken out, then they reverse to being long at the top when the commercials are going heavily against them. And of course, the pound came down quite nicely, okay? So rate of change, very important. Understanding weak credits, related currencies, I spelled currencies wrong, sorry about that, and proxy currency spillover. Now, a lot of people, when they look at the COT, only look at the majors. Look at the more minor currencies, the weak credits. Now, to give you an example, we've been looking for the dollar to rally over the last few weeks. It's had a bit of a rally. What's it going to rally most on? Is it going to rally most on the euro or the weak credits, like, say, for example, the Mexican peso or the South African rand? Well, it's going to be the weak credits, okay? And I think, always look at the minor currencies. The Mexican peso, I'll go to that chart in a moment. A bit of patience was involved, but that turned out to be a nice trade. In terms of related currencies and proxy currency spillover, this is where you can use the COT to give you ideas to trade currencies that aren't even on the report. Okay, so for example, let's take weak credits. Let's take the Mexican peso. The only reason the peso had been strong was because it's got good interest rate on it, 7.5%. It's a favourite carry trade of hedge funds, for example. Well, what's another weak credit that's going to be benefiting from the same fundamentals as the peso? Well, Turkish lira, interest rate of 10%. So we'd very often look for related currencies and trade them as well. Proxy currency spillover. I've done a video on this. What you very often get is, let's say with the euro, it's had a really good rally over the last few months. What happens? It'll drag up other currencies. So large speculators will spill over into related currencies. And good examples here are the Nordic currencies and the Eastern European currencies. Now, if the euro turns down, which currencies are going to get hit hard? Well, the proxy currencies are going to get hit harder than the euro because they've only been dragged up by the euro. Liquidity is less, so when speculators bail out, they should move faster. Okay, we'll look at some examples again in a moment. Point number 4, always keep this in mind when you're trading COT or trading Forex generally. Charts are a reflection of the fundamentals and sentiment. Okay, the chart doesn't come out of nowhere. It comes out of the fundamentals and sentiment. Now, why I'm stressing this point is when you're trading the COT, you don't be too fussy about your entry. You want a decent entry. You're not looking for the perfect entry, okay? Don't get too intricate with your charting and drop down to, like the hour time frame or whatever. Just go through big levels. Now, in terms of the logic of the groups, I actually like to, you don't have to do this, but I like to know why the commercials might have the view that they've got. And I've got a list of 10 banks and advisory services, and I picked them out because they're generally frighteningly wrong about turning points. So, for example, in USD CAD, which is one of my favourite COT trades at the moment, I can look at why all these banks advisory services think the CAD is going up. Canada is going to raise interest rates quicker than the US. All we can see that plainly isn't true at the present time. Also, none of them make reference to bond yields. Okay, bond yields are very important in terms of the USD CAD, and I just like to work out why the commercials are doing what they're doing, and if I can work it out myself, it gives me more confidence in the trade. But that may not be for everyone. Okay, right. Point number 5. Keep in mind expected payouts and probability. Okay, because they're different. And this is where I'll go back to when we're trading high volatility blow-offs. Like I said, we don't mind being early. We don't mind being stopped out, okay? Because we know we've got the expected payout on our side, okay? I just want to explain this in a little bit more detail. Excuse me. And always keep in mind the speculators are bigger than the commercials in terms of buying or selling power. The commercials basically are just giving you the warning sign. Now, just for new viewers, if you're familiar with expected payouts, you can skip the next minute and a half. But I just want to put up an example, and it comes from one of my favourite traders and authors, Nassim Taleb. And you'll see why, if you understand expected payouts and probability when you're trading the COT, you'll have no problem getting stopped out. You won't be tempted to run losses. Okay, so let me just give this quick summary, and then we'll be back. Welcome back of that short explanation there of expected payouts against probability. And what you always keep in mind if you're a COT trader is, for instance, when you're trading a big price spike, there is a probability, a high probability could go higher, but the expected payout isn't on your side because of where you've got to put your stop. The expected payout is on selling against the price spike. This means you're not going to be worried about being stopped out, okay? And also, you're going to have the confidence to hold your winners, okay? In terms of, a lot of technical traders have a real problem when they're doing price objectives, because how can you just tell a price objective from a chart formation? You can't. You need to know the buying and selling power behind the chart to set an ambitious target. That's the real advantage of the COT. So it does combat what we call prospect theory. I've done a video on this where we are risk averse above everything else. We're basically always wanting to cut profits in case they get away or run them because we don't want to take the loss. I think the COT really helps anyone get over that temptation. Now what we will do is we're going to move and look at some trade setups. So let's go and look at the charts. We'll look at some setups in relation to the tips and points we've just made. I'm going to start with the majors, and the first pair we're going to look at is GBP USD, because it's a good example of trading a price spike on high volatility and looking for a blow off, and you see the chart in a completely different way when you know the COT. We know this move up here, specs are starting to get run, then they take a really big hit on this one, then they reverse and go long. It's the biggest change around between the commercials and the speculators in the history of this pair on the COT. So we want to get short. So what we want to do is get short with an aggressive entry. So we just come in on this candle below 135. And like I was saying earlier on, when you know expected payouts, if I got stopped out on this, I wouldn't like it, but I wouldn't be too concerned. I actually did drop the stop back behind 137.35. I gave it plenty of room simply because I don't know, I just had real confidence in the pound coming down. But if we had spiked up and taken my stop at 137.35, I'd immediately come back in through the round number or below the round number. Luckily, that didn't happen. We got one last spike to get above these highs here, and that's the buying exhausted, half-hearted attempt to get higher. Then we're down. Then you're going to get a nice correction to the downside. So we can bank out when we get oversold down at the 131 level. We've got 370 odd pips in profit, but we want to come back in. Now, I actually elected to drop our trade back in at 131.70, okay? And we run on a little bit, okay? But, we're at the 20-day moving average, and we're at double trend line resistance. And as I was saying in my notes this morning, and we were going to get UK CPI. Everyone's saying inflation is going to be 3%. Bank of England are going to be raising rates soon. But that's in the price. Speculators have bought. So is the pound really going to have much upside? Personally, I didn't think so. And we've now slumped back to around 131.60. So back beneath our second entry. But again, I wouldn't have minded if I got stopped out. If we'd have run above the 20, just come back in through the round number, 132.80, or a quarter up to 134. But the minute she's going down, I'm looking obviously for the pound to go down to 129. Now, it's a fact in trading. Any big price spike is always going to fade back. Now, with this one, I was lucky. I didn't get stopped out on my first attempt, but I'm sure regular viewers of me will know that I got hit 3 times on that big rally in the USD against the JPY after Trump got elected. But eventually, the fourth trade got back the losses and gave us some profit. Now, I just want to move to my favourite major in terms of COT at the moment, which is this one. And I really like this. And in terms of, like I said earlier, the divergence between the groups doesn't look that big, but against other pairs maybe. When you look at it historically, you know it's a 5-year extreme. So down here, it's a 5-year extreme. What is it up here? It's still a 5-year extreme. So yeah, we traded long. We did actually bank out. So 121.65 in, 124.65 out. Then we went for the aggressive entry because the 20-day held. Okay, and now we're snaking up a bit. Now, we know there's still a 5-year extreme in here. So basically, we've got quite ambitious targets. I still think there's plenty left in this one. 127.80, then 130. Our stop protection, decent, makes it decent risk reward trade. 123.65. So this is my favourite setup in the majors. Let's look at the low volatility pair. And I'm going to look at, no, sorry, I've gone to the wrong page, haven't I? Where is it? Here it is. Euro JPY. This is a nice divergence on the COT. It's above 10. And in this sort of sideways action here, commercials heavily short, specs heavily long, and you get a build-up of commercial shorts here and specs long when we get above the 20, but we fail. So we've come in with an aggressive entry, 132.70, and we're really looking for this 132 level to be cleaned out. We're only sitting around 132 at the moment, but what we'll do is we'll look to see if we get a nice big red candle down. If we do, we can add to our position. We know speculators are probably going to get hit. I've got 128 as my first target. I'm actually looking for it to go down towards the 125 level. In terms of the euro, is there any more good news for it? We've got that stimulus story, which hasn't really powered the euro higher in recent weeks. Most people seem to be very bearish of the Japanese yen. Is there any more bearish news coming for the yen? I personally don't think so. I think data's picking up in Japan. They're going to be looking to cut stimulus soon. So, yeah, things are roughly in balance, but the speculators are probably going to get washed out on stop. So we'll see if we get, nice big red candle down, then I'd expect it to follow through to the downside. Right, let's go and look at some minor pairs. First one I'm going to look at is a proxy pair. It's going to be the USD NOK. And this fall in the USD has got nothing to do with strength in the Norwegian economy. You can go and look at the Swedish krona and Danish krona, similar chart formations. We got a decent long trade in this. We stopped ourselves out. Now we're looking to see if this support holds, which we think it will. So we're coming back in. Okay. Now, in terms of if the euro does start to go into a nice downtrend, the proxy currencies will basically get hit harder in our view. And we really like the look of this pair. Plenty of upside potential in our view. So obviously the NOK, it's not on the COT, but we're using the COT to generate this trade. Now let's go and look at weak credits. Let's take USD MXN. Now, in terms of this pair, okay, very choppy sideways action here. But the commercials, as we get down to the lows, continually coming in to buy as the specs come in to sell. And yeah, we've had 4 trades in this period here. 2 winners, 2 losers. But of course, the carry really hurt us. So you end up with nothing, basically. And then you get the break out of the range. You can see it here. That candle's off. She's away. And that is a really big move. And you know, once this candle's coming in, you've broken the range here above 1800. She's going to run up really nicely. Now, in terms of the divergence, when you look at the COT report, you know, it's not the biggest in terms of all the pairs, but historically, it's a big divergence, and that's why you get the big move. Over the years, actually, we've done well on the USD MXN. It's probably given us some of our biggest trades, so been lucky with it. Now, let's take a pair not on the COT again, which is just a related currency, USD TRY. We know that speculators were long the MXN just simply because of the carry. We know they're long the TRY because of the carry. So basically we can trade it in the same way. For us, we did take it at the lows. We're lucky there. Then through the 3,500 level, and then she exhausts. Okay, we were out at 370, so pity we couldn't get at the top of that spike, but alas. Right, now we're correcting back a bit. We're trying to get back in. I just can't get in at the moment. I just want to see a little bit more of a dip. But again, this is a huge move. Okay, and I think it's always a great idea to look in these minor pairs rather than the majors. I know I've said that on numerous occasions, but you very often get great trades. What should we have next? Sorry, let's go for another minor proxy. USD Huff. In terms of USD, I think it's got really good upside potential. Eastern European currencies have only been dragged higher because of euro strength. So low volatility. Let her take out these 2 trend lines and a 20, and you can see we've got pretty ambitious targets. My own view is, you know, you can use the COT obviously, and basically get trades on that are not on the COT report, if that makes sense. What have we got? Let me just go and find one I looked at the other day, which is going to be AUD JPY. Now, this is the biggest divergence between speculators and commercials on the report this week. We did grab it as it came down here, but now it's snaking back on us. But we've got decent stock protection. Okay, it's only 110 pips on this one. Now we're going to run into the 20 and the 88.50 level. Looking for it to hold. We know there's a massive amount of specs in here. It should get down to 84 in my view. If we bounce higher, we would look to sell, basically. This one is going to be going down in our view. Right, okay, so there's a few pairs in relation to the points that we've been speaking about. Now, in relation to the COT, this is just the way I like to trade it. I would recommend strongly, if you really want to get a really deep insight into the COT, read Steve Bryce's excellent book, The Commitment of Traders Bible. Yeah, he was really the first person to really get into the COT. I subscribed to his bullish review report, which is absolutely excellent. So that book is well worth a read. Right, I think I've covered everything I was going to cover. I hope you enjoyed the video as per usual. Thanks very much for watching me. Take care. Have a good day.